Hi everyone, it's Jack about another video. Today I'm going to be talking about Upstart, doing a brief stock analysis, talking about its earnings which released about an hour ago, to a pretty rough response for the market down around 10%. That's nothing on what has happened to Upstart in the past year. So since its yearly highs of around $400, you got to bear in mind this had a massive run up, around a 10x from its IPO only a year or so earlier, because it had massive revenue growth. It's now down to $32, and even then that is decently above 50% up off its 52-week low of just 22. So it's down 91%, nearly 92% from its 52-week high. That is ridiculous. That is an absolutely gruesome chart, and this earnings report does not paint any nicer of a picture, really. I've previously thought this company made a reasonable investment. I still think it has. It's not a completely dead business, but the results are going in the wrong direction. So I'm going to talk about them and talk about what I think this means to the company and whether I think it's a buy, sell or hold. So first up, a high-level summary of these results. Revenue up 18% year over year to $228 million. Now, on the surface of it, this doesn't actually look that bad, but of course, quarter over quarter, this is a massive decline from $310 million. Now, again, some companies, I would give this a pass for a degree of seasonality or whatever, but there was an expectation here by analysts of $298 million in revenue. That is a huge miss. Absolutely massive miss, 30 on the order of 30%. That is unacceptable for a company like this, particularly if it's valued how it is. It's not valued ridiculously, but there's an expectation that there's going to be some growth here. An 18% year over year growth is not really going to cut it, particularly when there's such a large quarter over quarter deceleration. Also, analyst expectations were for about 10 cents in earnings per share, and they actually recorded a loss, down from a $36.3 million profit the year before. That is really, really poor. There's nothing really can say here. Adjusted EBITDA, $5.5 million. Of course, don't really like that we're even talking about adjusted basis when there's previously a company that was recording a nice net income. That's down from nearly $60 million last year. These are ridiculous declines, and this is a company that is really, really struggling at the minute. And it's very hard to get behind a reasonable investment case. When you dig into these numbers a bit further, even those year-over-year numbers in some cases are absolutely gruesome. Loss from operations, 188% down year-over-year, 192% down quarter-over-quarter. Net income, down 180% year-over-year. Anywhere you look here, it is rough. Absolutely rough. Revenue, down 26% quarter-over-quarter. Revenue from fees, down 18% quarter-over-quarter. There's nothing really that I can grasp from this report that is worthwhile, that makes this an investable company. And then to make matters worse, the outlook for the following quarter looks even more gruesome. $170 million in revenue. That's again a significant deceleration. They were looking at last year Q3, they were in the $300 million range. This is almost half the revenue. That is terrible. Net income again, $42 million loss. Adjusted EBITDA, nothing, and they're probably going to increase the share count. This is looking like a company that is in severe decline. What previously looked like an extremely profitable model with good gross margins and good revenue growth is going backwards at a fast rate, not to mention the addition of loans to the balance sheet, which in my opinion makes this a significantly less attractive investment. Again, not to mention that management said that they weren't going to do this, and by Q1 this year they had backtracked on that and increased the loan count sixfold. Really, really not a good sign in my opinion. Went from a previously very healthy balance sheet of $900 million in assets and $188 million in liabilities to $2 billion in assets and $1.1 billion in liabilities. And this is just a loan increase, but it's an increasingly cluttered balance sheet, and no one wants to see loans because that just increased the inherent risk for this company. What was previously a high gross margin, asset-light business, this is dramatically changing the story for this company. Upstart as a business right now is on a steep decline. It's bleeding, but I'm not sure the injury is terminal. There's still an enormous market, and 100% there is need for disruption in the FICO system that Upstart is doing well, and it is well liked by consumers, and its services are generally taken up more by banks. They're moving into different opportunities. They're moving into the auto opportunity. There's a huge market potentially for mortgages. They've originally just been basically in personal loans, not to mention small businesses. The total addressable market can increase an enormous amount from around 130 billion to already the auto loan market is around 770 billion, and you can see that the total market is $6 trillion. If they could even capture a small amount of this, they could have a fantastic business strategy. Of course, I hate using that term, if they could capture a little bit of it, because right now they're really struggling with that, and they're struggling to make this a viable business going forward. And I think, to be honest, the best case scenario is that they're bought by a larger bank and integrated into the system. Another testament to the usefulness and potential of this system is that in just over a year, they've tripled the amount of dealer rooftops, which is basically the total dealer locations that are using Upstart auto retail software at the end of each financial quarter. They're now at 37 different OEMs. It's gone up 22% quarter over quarter, where everything else with this business is declining massively, and borrowers have saved an average of $4,800 over the lifetime of the loan by refinancing. This is clearly a business that helps consumers and is to a point necessary for the market, and is a market ripe for disruption. I'm just not sure if Upstart management are able to capitalise on this. In summary, even after revenue and profit warnings, I still think this is an absolutely putrid quarter, below my expectations and far below analyst expectations. This is a company that has fantastic total addressable market, fantastic opportunity. I just think that management so far have not proved that they're capable of capitalising on this. They had a huge run, and since then it's been nothing but bad news. I can't really see this company being able to turn it around in the short term unless the auto market just becomes a fabulous opportunity for this company. But moving into recession with increased default rate, Upstart, I believe, taking loans on its balance sheet is looking like a really, really bad move right now from my point of view. I just think this business has even rockier roads ahead, and that is not good for a stock that's already down 90%. I just don't think this is an investable business right now. I do, however, think that there is definitely a need for this product and its services, and I believe that there is a company, an investable company, that could be coaxed out of this. I'm just absolutely not willing to invest right now with the current state of its results and its current outlook. However, I think there could be potential in the future, but for right now, it's an absolute stay away. I just don't believe the management are capable of doing this. I don't tend to like investing in companies where I think the best case scenario is that they're acquired by a bank or whatever. With that being said, none of this is just my opinion. None of this is financial advice. I'm not a financial advisor, and you should do your own research and due diligence. Let me know what you think of Upstart in the comments below. Let me know what you think of this quarter. Personally, I think it's an absolute disaster. You may not. You may think something different. Let me know. Like and subscribe and enjoy the videos. I'll see you again next time.